What's going on, guys? Are you brand new to Forex trading and don't know where to start? In this video, I'm going to show you step by step how Forex trading works in 2025, what it is, how to read charts, how to place your first very trade, and even a simple beginner strategy you can start practicing today. So whether you want to trade currencies like Euro USD or gold, by the end of this video, you'll have a complete beginner-friendly roadmap to start your trading journey. My name is B Castle. Without any further waste of time, let's get on to the video. So first things first, what is Forex? What is Forex? Forex stands for foreign exchange. It's the global market where people buy and sell currencies. Think of it like this. If you travel overseas, exchange US dollars for euros, you just participated in Forex. The difference is in trading, we do this online. And the market is huge, moving trillions of dollars every single day. So in short, Forex is equals to trading one currency for another, trying to profit from each and every price move. So it's simple and plain, whereby you just see it as exchanging currency, like traveling when you go to the US and you exchange, or maybe you go from US to Europe, you exchange your dollars for euros. That's simply trading. We're just doing it online with Forex trading. So how does Forex work? In Forex, we trade something called currency pairs. For example, Euro USD, the first currency, Euro, is called the base currency. And the second, which is USD, is the code currency. Okay, for example, Euro, Euro USD. Okay, the first currency, which is the Euro, is called the base currency. Even if the USD can be the first, maybe you have, for example, maybe we have USD JPY. The first currency is the base currency, and the second currency is the code currency. If Euro USD is at 1.10, that means 1 euro is worth $1.10. Okay. If euro is at 1.10, that means euro is worth $1.10. If price goes up, the euro is getting stronger. If it goes down, the US dollar is getting stronger. And then if we are looking at USD JPY, if the USD is going up, then the currency is getting stronger. If the JPY is going down, then the USD JPY is getting strong. And when we trade, we pay attention to two prices: the bid, which is the sell price, and the ask, which is the buy price. The small difference between those is called the spread. That's basically the broker's fee. We'll get into that later. Make sure you stick long enough to the end of the video so you can get all the knowledge that I'm about to share. Please subscribe if you are new to the channel. Also, put on the notification bell so you don't miss any trade. So, the next point, the tools you need. What are the tools that you need in order to start trading? Number one, you're going to need a broker. Make sure it's regulated and trustworthy. So the brokers I would recommend, I won't recommend any broker for now, because they didn't sponsor this video. So you're gonna need a trusted broker. Make your research whether the broker is regulated. There's a lot of brokers in South Africa and even overseas, the United States. You can still trade using those brokers. And step number 2, you're gonna need a trading platform. You're gonna need a trading platform. Most brokers give you MT4 and MT5, or you can use TradingView for charting, like the one that I'm using right now. It's for free to use. All you do is just go to your tab and just simply search for TradingView, and then you're gonna create an account there. After creating an account, you sign in, then you're going to get what you see here on the screen, something like this. For example, let me show you, let me demonstrate on how to go about it. Sorry about that. So you're simply going to go to your tab and just search TradingView. TradingView is just a platform whereby you can just check your charts, you analyze. This is what you're going to see, and then you click it. After clicking it, it's gonna redirect you. Then you are gonna sign up from here. It's easy. Getting back to the video. Step number 3, you're gonna need an account. You're going to need an account to start trading, and that account you're gonna open it from the broker. You're gonna start opening the account from the broker. So these two are linked. I recommend starting with a demo account also, so you can practice risk-free before using real money. So all brokers provide you with a demo account whereby you can practice I recommend practicing for 3 months. 3 months, one strategy before going to a live account. You'll also see something called leverage when you open when you open an account with a broker. There's something called leverage. Leverage lets you control bigger positions with a small account, but it can also increase your risk. So be careful with it. So that's it for the tools that you're going to need. Okay. That's it for the tools that you're going to need. Let me just do this. Please be patient with me, guys, because this is valuable information. These are the tools that you're going to need: a broker, a trading platform, and an account to start trading. So, how to read charts. Now, let's look at charts. Okay. Let's look at the charts. Just going to quickly remove these drawings that I have on the chart. How to read charts. Forex charts usually shown in candlesticks. A green or bullish candle means price went up during that time. and a red or bearish candle means it went down. Looking at my chart right now, usually when you open a new trading account with a broker or a trading view, usually the candlesticks are red for when price is going down, but mine are gray because I actually like these colors. So you are able to change the colors of how you want your chart to look. You can even make it pink if you're a girl and you want your chart to look pretty or whatever. But for me, I like blue and gray. So you'll get a red, for example, a red candlestick like so. If price is going down, okay, and it's going to have its wicks. I'm not going to perfectly draw it, but this is a bearish candlestick. Okay, it's gonna look like so, and the bullish one is gonna look like so. Okay, this is how it's going to look. This is a bullish candlestick, and the red one is a bearish candlestick. Okay, you'll also see different time frames. For example, your 1 minute, so whereby it shows each and every candlestick. A new candlestick shows up each and every minute. Then you're gonna have your 1 hour, whereby a candlestick shows up each and every hour. And then you're gonna have your daily, whereby a candlestick shows up each and every day. Okay, each and every 24 hours. For beginners, I suggest focusing on the 15-minute and the 1 hour chart because they are not too fast and they are not too slow. And one simple concept to know is support and resistance. That's the simple concept that you need to know. Support is price level where the market keeps bouncing up. For example, here, let me make an example with this. Let's say, for instance, we are on a live chart, and I'm going to draw support. Okay, this is support, and when price gets to the support, it's going to buy. Okay, and when it gets to the resistance, it's going to sell. But that's not always the case. It depends on how price reacts when it gets to those levels. So right here we have a support. Let me just put this inside, change the color to white. We have our support here. When price gets to the support, it bounces up. And when it gets to the resistance, it bounces down. Okay. So when it gets here, let's say for instance, this is price, goes up, and when it gets there, it's gonna bounce down. So this is resistant level. Okay. Those levels are key in trading, these levels. And I'm going to go to the chart just now to show you examples. So that was a drawing. So let me do this, show you an example on the chart. As you can see now, price was going up. Resistance level doesn't mean that price won't break it. As you can see, we had a resistance right there. And when price went down, okay, price went down, came back, went down like this, came back to the resistance, and then went down, came back again to the resistance, then went down, and then it broke the resistance. So the resistance, when it's broken, it turns into support. Remember what we said? Support is when price gets to support, it bounces up. So now price is going up. Okay, so that's basic support and resistance. Simple and basic. Moving on to the next part of the video, placing a trade. When you expect price to go up, you buy. And when you expect price to go down, you sell. But we also protect ourselves with something called a stop loss. Okay, that's where you tell the system to close your trade if it goes too far against you. For example, let me just say, let me remove these drawings. Okay, just say you wanted to sell from here, and then this is a take profit. You are able to set an automatic take profit. If you are not looking at the chart, you are able to take profit automatically without being on the chart. It's the same as stop loss. The red part is the stop loss. As you can see, maybe if, for example, we intended to take a sell here and price goes against us, as you can see, when I say sell, when you sell price, you expect price to go down. And when you buy, you expect price to go up. So, for instance, maybe we try to sell here and then price is going against us. As you can see that we hit the stop loss. So this means you are automatically taken out of the trade. You are able to manage risk. You are able to manage how much you want to lose when you enter that specific trade. Okay, and we take profits with something called take profit order, which is the order that you set for a profit that will be taken automatically after you set it. I won't go in depth on how to set it, but this is just a basic beginner video. Okay, let's say for example, I think Euro USD will rise. I buy, I set a stop loss below the last low, but in this example it's a sell, folks. I wanted to sell here, but price went against me, so it hit stop loss. So I didn't lose all my account. I didn't blow my account. You are protected by the stop loss that you set. I hope we are clear on that part of take profit and stop losses. So now let's go to a strategy that I'm going to teach you, which is beginner friendly. If you're a beginner, I recommend using a simple strategy. So now, let me show you a simple beginner friendly strategy and here how it works. You draw your support. You actually have to draw your levels on the chart. After the basics, you have to go to the charts, practice how to draw your support and resistance levels. Doesn't matter how difficult it seems, just go to the chart and just draw. As you can see, just draw where price touches more than twice. If price touches more than twice, then you have yourself a level right there. Okay, even if it doesn't touch twice, if price creates a higher high whereby it's at its highest and reverses, like here price was at its highest and it went down and it came up, tried to reverse but failed, then broke out again. So you can mark this level. So now what will we expect from here? We expect that price will come back to retest this resistance level and turn it into support like so, and continue buying. Okay, and that's where you'll have your stop loss and take profit set. Maybe you enter a trade here, then your stop loss will be maybe below here. Okay, and then you take profit. Maybe you can set it according to your risk to reward. I'll go in depth with risk to reward on another video. This is just the basics. Okay, so you need a simple strategy. You don't have to complicate things. You can even use a moving average. Okay, you can simply even use a moving average. A moving average is simply a line whereby it's going to be automatically drawn on your chart like this. As you can see, that when price is above this line, you buy. This is called the moving average. It actually helps you to determine whether the trend is bullish or bearish. By bullish, I mean the trend is buying, and by bearish, I mean the trend is selling. Okay, so now this is a bullish momentum. This is a bullish market we're looking at. This is gold, by the way, and it's currently buying. So when price is below this line that you see, then you'll be selling. But in this example, price is above, so you are going to look for buying opportunities. So combining this moving average and price action, like your support and resistance level, you have yourself a strategy. You don't have to complicate things. You have yourself a simple strategy, or you can even go and option for the simple and retail method of trend lines. Most people will tell you that trend lines don't work because of these new strategies that are out there. So trend lines do work. Just have to find an edge. You have to back test it. You have to test it each and every day, and also back test it on how it actually works, so you can be confident when you trade using a real account. Okay, so going to the risk management, we're going to talk about the risk management. This is the most important part. Don't skip this part. Most beginners lose because they risk way too much. The rule is simple. You never risk more than 1 or 2% of your account. Never risk more than 1% or 2% of your account. For example, you have, maybe for instance, you have $200. Okay. Maybe you have $200 or 200 Rand. No matter the currency. Let me just say 2,000 Rand. You have $200 or you have 2,000 Rand. So 2% of the $200 is foreign. So with each trade you're going to place, your stop loss, you make sure that it's not above 2%. MT4, don't worry if this is confusing. MT5, the platform MT5 we spoke about earlier, those are the platforms you're going to need to connect your broker. So for instance, if you have $200, just remove the 200 rands. You have $200, or I can just maybe example make it rands. Let's just make it rands. We have 200 rand, and then 2% of 200 rands is how much? It's foreign. Okay, it's foreign. So you're going to risk foreign with each trade that you open with a 200 account. So if you're going to open four, or maybe you're going to open however positions, let's just you open 4 positions, you're going to lose 16 rand if the trade hits your stop loss. So you still have the amount to trade with, minusing the loss. So that's the importance of risk management. Never risk more than a certain percentage. Maybe you can put your own percentage. Maybe, for instance, you can say 5%. Your stop loss, you put it at 5%. MT5 has a stop loss. When you put a stop loss there, it shows you how much you're going to lose. So you are able to manage risk. So if you have $1,000 or $2,000, 2,000 rands, doesn't matter. Just keep on risking a certain percentage with each trade. So you know that you can still survive to trade the next trading opportunity. So what's after this video? What should you do after this video? After watching this video, I'm going to recommend that step 1, okay, open a demo account. Open a demo account and practice. Practice on a demo account before you're going on a live account. Step 2, choose one simple strategy like the one that I showed you. Choose one simple strategy. Don't jump around. Don't change strategies, because that's just going to take you longer to be profitable. Step 3, track your trades. Learn what works and what doesn't. Track your trades. Okay. You have to learn what works for you and what doesn't. You have to write them down. The key is consistency. It's better to master one basic strategy than to try 100 different ones. It's that simple. This is all you need, the information that I gave you to start trading. But it gets deeper than this. It does get deeper than this. Remember, keep it simple, practice on a demo account first, and focus on learning one strategy at a time. If this video helped you, hit the like button, subscribe for more Forex strategies, and turn on notifications so you don't miss my next video. Up next, check out my video, please. I'll leave the link in the description. My other recommended video that you should watch after watching this one. All the information that I spoke about in this video, it's all you need to start trading the Forex market. Peace. I'm out.